those who can make it here. Let's maybe just do a 1-minute round to hear how people are doing, and if you have any questions for me, anybody want to jump in and say how it's going, and if there's anything that you want to ask me.
I have a question.
Hi, and
where can I find the template? Because I know there's a work that's supposed to be due. It's not due yet, but it's a assignment that we're supposed to complete. But I don't know where I can find. I checked on the website from Blackboard, but they don't have anything.
Okay, so do you know which assignment you're referring to?
The one after the degree map.
Okay, so I'll share my screen and go to the master calendar, and maybe we can see from there. Are you talking about this financial literacy reflection?
Yeah, that's it.
Yeah.
Where
So
can I find that paper?
so if you go to the Zoom call materials, yeah, let me find, personal financial literacy reflection.
I thought it would be like a new week and then. Okay.
No, because it's still related to what we were doing. Remember last week we were doing personal finance. So we're still doing that, and the financial literacy, all the materials related to that topic are in the same section here, so that you don't have to go to all different places to find the work.
Got it. Wait, where do we submit it?
Yeah, so I gave instructions on the document. Let me just open it. You're gonna go to, and I can open the Eportfolio so that you can see in Eportfolio, there's a first year seminar for business coursework tab. And okay, so let me just go there. It will be easier to explain it that way. I just have to sign in to Eportfolio to do that. Just 1 second. All right, so I'm just gonna go to I have like a sample Eportfolio that I can use to just demo this. Where is this thing now? Just 1 second. Okay. So on the Eportfolio, some of you guys hid tabs that you weren't using, I think, like you have the About Me and you have the Planning for Success, but you may not be showing these tabs maybe in your published view. But when you go into your Eportfolio, it is there. The tab is My Coursework. You go to First Year Seminar for Business, because that's the class that we're doing. And then I said that you could just, excuse me. All right, this thing is. I said that you could go into other assignment and you can basically insert a slide and start, well, there's a slide here already, excuse me. So you can just type the title of the assignment and start typing your answers and then click publish.
Thank you.
All right. Other questions about that assignment, or are you good? Good?
Oh, for me, no. Yeah, I'm good. That was all I needed.
That was it. And then for those who were in Thursday's class, and I'm sure Jessica explained this, but I just want to reiterate that planning for success, degree planning, early stage, all the work that you were doing with me for advisement, where we were doing course selection. If you scroll to the bottom of this section, some of you have already done this, others maybe not. You're supposed to be entering the finalized version of your degree plan, after we've gone back and forth and actually agreed on whatever you're taking. The finalized version of that should be entered in here, so that even after you are done with me, you will be able to find your choices again, so that every semester you don't have to start, from scratch, trying to figure out what it was that you were going to take. So again, part of our work to finalize the work is for you to just enter your courses on here and also to publish those changes. And as I said, more so for me, sorry, more so for you than for me, because I just want to make sure that you have a reference once you're done with this class. And on the note of advisement and registration, I'd like you guys to go now to take the time to go into your CUNY First account if you haven't been in there recently, and sign in and look to see if you already have a registration appointment listed for you, if you haven't registered already. If you have registered already, please tell me that. Otherwise, I'd like each of you to tell me that whether you can or can't see your registration day and time, so the time when your registration opens. So take a few minutes and do that now, please. You're looking in CUNY First. Anybody who's found the registration appointment date is welcome to tell me so that I can write it down.
What is that, to register for classes?
Yeah. So basically, last week Thursday, the registration already opened on the 23rd, and I just want to know when you guys, from when you were already able to register, so that I can make sure that I'm following up with you for those who are going to be taking classes in Fall 1 and Fall 2, to make sure that you're actually registered for your classes.
I'm trying to do it now because when I tried to do it over the weekend, I guess the website was shut down for maintenance or whatever.
Yeah, so I mean, I don't mean, maybe, let me be clear, you don't have to register right now. I just want you to tell me what the appointment date and time is that you see. It should be like on the landing page in CUNY First, somewhere on the right-hand side, maybe somewhere near the middle. It should say, or it may say a day and time when you can register.
Oh, mine was on the 24th at 10 a.m.
Okay, so you're already you're able to register, and I believe if I'm right, that you are comfortable, right, with the classes that, I mean, comfortable in the sense that you know which classes you have to register for the fall. Okay, all right, but you couldn't register over the weekend because there was a problem in CUNY First, right?
Yeah, I wanted to ask you a question about the BTA 112 because I have to take it in the second session of fall.
Yeah.
And I saw your name there as fully online. I wanted to click it, but it says like it doesn't give me a date. It says it has to be announced, or
for when the class starts in the fall, you mean?
Well, it didn't give me like a day and time, but it says your name and fully online.
Yeah, there's not going to be a day and time because it's fully online, which means it's asynchronous. So it's not like how we have now where I'm giving you lectures on a particular day and time. It's basically completely online. So I could give you guys materials that you can watch and listen to at your own leisure, but we don't, the fully online classes, we actually can't meet because students specifically sign up for it so that they don't have to meet with anybody at a particular time because most of them are working or doing other things.
So, okay. All right, now I understand because I didn't want to click it. I'm like, all right.
Yeah, and if you do want to register for my class, which is fine, you may also then still face an additional hurdle because if I remember correctly, you withdrew from your Accounting 1 class. So if you have to do Accounting 1 in 4.1, then you will need a special permission, which I can get for you from the department to register for Accounting 2 for the second session, because theoretically you have to finish Accounting 1 or be close to finishing it before you can register for Accounting 2. But again, I can help you through that. I just don't know, I would welcome you into my class. I just don't know after what happened this semester if you're going to feel that hyped about being in a online, fully online situation.
You don't do Zoom for those, right? Like it's not gonna be.
I can't. I mean, that's the problem. Like I can't tell students who are fully online that they have to attend a session because that's breaking the contract of a fully online class. Right now, because we're in distance learning, this is not fully online because you guys registered for a face-to-face class. Right. So that's why I still have the flexibility to be able to meet with you because no one can really tell me that, we're not supposed to meet because there was no day and time that was set aside. That's the issue. So all I can do is refer people to the Zoom and other recordings that I have, from prior times and the materials in Wiley Plus. And it's almost like it's semi self-study, but of course I provide support. I would also have office hours, but that's about it.
Okay.
So you can think about that. If you want to register for it, you can, in the fall, I mean, it's still somewhat up in the air. No one can, we were on a call yesterday with the president and the provost of the college. No one knows at this time whether we will be completely face-to-face in the fall yet. We still don't know.
Okay.
So, so we all need to plan for the fact that it could be, God forbid, but that it could be that in the fall it's still distance learning.
Right. Okay.
So think about it. Let me know what you want to do. If you do need to come into my class, I can try and get you in. All right.
Okay. Thank you.
Okay. Anybody else? Do you have a registration day and time? Tenzin, Andal, Jackie, Yingchi, who else is here? Jahi, do you guys have any dates and times coming up?
The only dates and time they show for me is maintenance for the CUNYFirst website.
Is maintenance, you said?
Yeah.
So on your CUNYFirst landing page, you're not seeing on the right-hand side anywhere that says the registration appointment or something?
No.
Huh. So you haven't been able to register yet, obviously.
I haven't checked it yet.
Wait, so you're not in there now?
I mean, like, I haven't tried to, like, register for my classes yet. That's what I meant when I said I haven't checked it yet.
And just 1 second, and Tanisha, did you see the day and time on somewhere on the right-hand side of the landing page? Am I correct?
Yes.
Okay. So Andal, you don't have anything yet. So maybe you can try to register and see what happens is what you're saying, right?
Yeah.
But you're okay. I think you and I spoke and you know exactly which classes you need to register
for. I already know which class I'm going to take.
Okay. And some of the other people, Jackie, Jai, you guys may not have dates yet because some of you are still doing ESL, right? Okay, so Jai, you're saying yes. Okay, so your registration, if you're doing ESL from 97 through 99, or you're doing ENG 99, your registration is going to depend on when you take the test excuse me, the language tests and stuff. So it's probably not going to be for a while when you'll be able to register. But I've worked with the three of you to come up with a plan for your registration. So I think we're okay. Tenzin, are you there?
Yeah.
Yeah, so I know I emailed you with questions about your degree plan. I haven't heard back from you. Are you still working on that? What's the deal?
I'm almost done.
Okay. So I'll hear from you soon is what you're saying, right?
Yeah.
Okay.
So
Okay.
like I could start I think I could start registering for my classes for next semester, and I already know which classes I'm gonna take.
Well, I understand that, but I also want you to respond because I know I sent you an email with questions about some of your choices that may be impacting other things. So let's first iron that out before you register for anything, because I don't want you to register for stuff either that you don't need or things that, you're leaving out things that you do need. So please go back in your email and find the email from me and look through it. Make sure you understand what it is and email me back sometime this week to let me know what your final selections are. All right?
Okay.
Okie dokie. All right. So great. Thank you, everyone. I don't know where the rest of your colleagues are, so we'll just work together with whoever is here. Right. So that's the end of the degree planning stuff. I just really wanted to make sure that for those who were here, that registration was happening. I understand that we're in a little bit of a strange situation, not knowing exactly what's happening in the future, but you don't want to find out later on that there were courses that you could have taken or that you wanted to take that have now filled up because you didn't start registering when you had the opportunity to do so. So we'll change gears here now a little bit and just continue with or finish up, I guess, on the personal finance work, and then also deal a little bit, if we still have time, with time management. So when you were in the Thursday class, I know that because Jessica and I speak quite a bit, I know that she may have shared the Excel budget with you that I shared with her as well. So before we look at that, we're just going to talk about budgeting a little bit as part of this personal finance work. So last time, we spoke about the implications of COVID-19 for finances and, unemployment, stimulus checks, and so on. We also spoke about your credit score, fixing your credit, freezing your credit, protecting yourself, from online scamming and so on during this time. Again, I've seen it again in my day-to-day, more so with on my husband's side, that people are still trying to scam and fish and get information because they realize that so many of us are online now, and that our information may be somewhat, easy to get to. But today we'll look at budgeting and then move into one or two other topics. So who wants to either in the chat window or just say out loud, why do you think a budget might be necessary for you or for anybody? Why is a budget necessary? Any thoughts? is a budget necessary? Maybe the bigger question is, do you think people need a budget? Yes or no?
Yes.
Yes. Okay. So at least we have some agreement on that. And to to have, maybe you guys have had some time to think about why it may be that people need that.
Well, for me personally, I know I need it because if I don't, I'm just gonna waste my money away, and
Mm-hmm.
bills won't be paid on time if I don't set, certain. I guess I got to calculate my monthly income and then calculate all my bills. So you got to know, how much to spend on this and how much to spend on that. It's very
Right.
important.
Right. So you've touched on a lot of points there. So to some extent, we're almost saying that a budget is like you're trying to create boundaries, right, within which you're operating so that you don't overspend on certain things, so that you meet all your
Yes.
obligations, and any goals that you may have set for yourself, are also met, whether it's paying down debt, whether it's saving, investing, and so on. Absolutely. And you also spoke a little bit about what is included in the budget, because you were saying, the various expenses that you
Yeah.
have to pay. And so, we look at obviously the income, that whatever we have coming in, and then you have certain expenses, obviously, that just won't change every
Mhm.
month. They'll be the same, right? Like rent or certain fixed, as we call it, fixed expenses
Yeah.
that we just know are going to be there, utilities, rent, etc. And then you've got, your variable expenses that for many of us now, some of those expenses have changed quite significantly because we're at home. So they may not look the way they used to. Good. How do you know whether your budget makes sense or not?
Just got to figure it out. What do we?
Yeah, I mean, it's also, if you are making a budget and it's saying that at the end of every month, you're gonna somehow have like $100 or $200 left over that you're gonna save, and you find out after a few months that that's just not happening, then obviously something is wrong with how you're budgeting. So the big thing is, a budget is nice, and it's nice also almost in, if you could call it, in theory, we can make all kinds of nice polished budgets, but the reality is, or the most important part is, to actually compare it to your actual spending. Because I think, you can say, well, this is what I hope to do, but that's not necessarily what you end up doing. So when I first was building budgets for myself, the biggest thing was actually to start by trying to maybe estimate a little bit what I think I'm doing, but then to track expenses, right? Tracking expenses to try and figure out what actually is happening, because how we behave in real life or in reality is sometimes very different to how we wish we behave. And here's the last question. So what is the difference, anybody, between a need and a want? What's the difference between something you might need versus something you might want?
I mean, a need is something that is essentially like something you need to survive, like water,
Mm-hmm.
air, food, or security. And a want is like something you just want to, like, I don't know, look better, make yourself happy. Can be like, hey, I want this car, let me just go get that.
Yeah,
So
that's
need
a,
is, yeah.
yeah, go ahead. Sorry, I didn't mean to cut you off. A need is?
No, I was just gonna say a need is just something you need to survive. And a want
Right.
is just something you want to make your life better.
Yeah, so exactly. Thank you. So basically we're saying that from, if you, I don't know if you've learned this in your other business classes, but there's such a thing as Maslow's hierarchy of needs, and that's exactly what you're talking about there, about the fact that, we start with these really basic needs: food, water, air, shelter, etc., and you work your way up, and eventually, getting to things like you said, it's a nice to have. It's like an enhancement of your life, as opposed to necessarily that you would fall apart or, God forbid, die if you didn't have the thing. So What sometimes is difficult though when we're budgeting or we're thinking about spending is differentiating between what we need and what we want, especially in a consumption-driven society, which is what we live in right now. You know, where it's so easy to confuse, or you know, to not be able to differentiate between needs and wants. I've been thinking about this a lot as we've been on lockdown here, because there are many things that, you know, under normal circumstances, you know, if it's something to do with, you know, maybe to do with my daughter or whatever, I will just jump onto Amazon and buy the thing because it's just convenient and it's one click and so on. And now with, you know, non-essential deliveries taking much longer, and even just thinking about whether it's necessary to buy something, I've actually found a lot of ways, you know, that reminded me of when I was growing up, when we definitely didn't have the money to just buy things all the time. Ways to change my thinking about needs and wants, and become a little bit more, I guess, entrepreneurial about finding ways to meet our needs or wants without spending, you know, a ton of money. So here's Warren Buffett. Do you guys know Warren Buffett at all, who that is? No? Okay, so he's the head of a company called Berkshire Hathaway. He looks like this. Maybe if you see a picture of him, you would have seen him in other stuff, right? So this is Warren Buffett. He's considered, you know, one of the, I guess, best or preeminent investors in the world. And you know, this is just he's thinking about needs and wants. If you buy things you do not need, soon you will have to sell things you do need. And I think that, you know, that's helpful to think about the, you know, differentiating between needs and wants. Warren Buffett is, you know, a billionaire who still lives in the same house that he used to live in from, you know, back in the day, and doesn't, you know, spend that much money. So even though he's so rich, I am taking some advice from him, because he obviously has still managed to differentiate between needs and wants. And so as we go into budgeting, you don't have to follow this approach, but it is an approach that comes up a lot in the financial literature to check, you know, we just spoke about how do you know that your budget makes sense, the reasonableness of your budget. This is a guideline of how you might want to do it. Must have expenses. So we're talking about fixed expenses, expenses that you really cannot do without, could be about 50% of your budget. Wants, so if you say, well, you know, there are still things that I want to do, I still, you know, once we're out of lockdown and so on, I still want to be able to go out to eat, or I want to have some entertainment, or I want to be able to go on vacation. 30% of your budget. And then savings and debt repayment. If you have debt repayments, you know, that's part of the 20%. If you don't have debt repayment, trying to save a substantial portion of your income. In this case, they're recommending 20%. And we'll see later on when we talk about, you know, even saving for retirement, the recommendation is around the 15% mark, trying to save about 15% of your income for retirement. So obviously that comes up to 100%. And again, the thinking here is just that you want to be able to split up your needs and wants in a way that you can easily, if you find that you need to cut the budget, you know, you can easily probably start over here with saying, well, is there any way I can trim some of my expenses? If not, you know, maybe I need to cut down on the savings or on debt repayment. Any questions about that kind of formulaic approach to budgeting? All right, so we'll go into the actual spreadsheet here. Did anybody already start working on this? Or does anybody already have a budget? Because you don't have to use the sheet if you have something else already. I actually have our household budget in a tool. I don't know if you guys are familiar with this, a tool called Mint, M-I-N-T, mint.com, where it compares, you put in your budget and then it kind of just aggregates all your expenses and lines it up against your budget to tell you if you're over or under. Does anybody else use any budgeting tools?
For me, I feel like I don't really use that because right now I'm not in the need for it because I don't really spend much.
Yeah, and so thank you for bringing this up because I've had in the past where students are like, well, I'm not saying this is your circumstances, but I've had, since I live with someone else or I live at home or whatever, and everybody else pays, pays the expenses and I don't have to pay much or spend much, and then when my point or counterpoint or whatever to that would be that you maybe want to think about, are you working or you don't have to work at this time?
I work.
Yeah, so maybe you can think about for the money that you do have, what are you spending, like putting down in your expenses here what you're spending it on and seeing what you should be ending the month with according to, your thinking right now of your expenses, and then trying to see whether that's actually what's happening or not, because you're actually in a very good position in my opinion, because it seems that you're working but your salary that you're earning for your work is not being consumed by all your expenses, which means you actually have a prime opportunity to save or invest or do something with your excess funds, or even just build an emergency fund. Remember last time we said that the emergency fund should be about 3 to 6 months of expenses. Does that make sense? And what I'm saying?
Yeah, that makes sense.
All right. So maybe, and again, others may be saying, I'm not working, I'm staying at home, my parents are paying for everything. I get it, but I think it would be good for you to imagine then, if you are in that position, imagine if you weren't staying at home, what you might have to pay for rent and so on, what type of income you would. So you're building basically a hypothetical budget that if you had to move out, let's say at the end of the year, you move out from home, what could you actually afford, to do? Remember we spoke about earnings potential and so on. So any body else that is already using a budget or already started working on the spreadsheet? Okay. So I'll just walk you through the budget. The top part is just income disposable, meaning the income that you can actually spend. So if you look at your pay stub, it's it's the net pay that you bring home. So salaries or wages, if you get any social security, maybe you're renting out a room in your apartment, you might have rental income, you might get child support or any other income if you get an allowance from your parents or something like that, other income, and that gives you your total income. This could be weekly or monthly, depending on what is easiest for you to do. And then if you want to figure it out yearly, you can obviously just multiply by 52 or by 12. Then, classic fixed expenses, meaning these expenses rarely change. You kind of just have to deal with them. You've got mortgage and rent, property taxes, home insurance, health insurance, gas and electricity, if that's something that you have to pay, telephone, cable, internet, car payments, subway, childcare, gym, subscription, tuition. So you might say, well, we're on lockdown, so I have no commuting expenses, but let's build the budget for the average case. I mean, when we go back to normal, you will have commuting expenses, again. And then for variable expenses, and again, yeah, maybe base it on the last month that you had before lockdown. What did you spend on eating out, which varies. What are you spending on what were you spending on groceries, clothing, beauty, manicures, pedicures, gifts, etc. And you can also add your own, because there's probably stuff that I forgot about. And then that's the total of the variable expenses. Then if there's any payments you have to make on loans, credit cards, etc. You add those in as well. And then the bottom summary here, this is your total income, however much that is, total fixed and variable expenses, and your total debt repayments. Then it will tell you how much you have left over, or maybe you're overspending more than you're actually bringing in. And then normally when it comes to savings, we talk about pay yourself first. So in other words, your savings should happen before anything else happens. But for the purposes of this budget, we first just want to see what you're actually doing in terms of your expenses, to see what is possible in terms of savings, instead of trying to say, oh, you have to save, $50 a month, but then you can't meet your obligations. So we'll try and see, after you come up with your amount that's left over, how much can you put towards an emergency fund, excuse me, if you don't have one already, or any other types of savings. If you work at a company that has a 401k retirement plan, then that's probably something you want to get involved in, and I'll speak more about that later. Any questions on the structure of this budget? Okay, so some of you may say now, well, I don't have all this information. Sorry, my throat is dry. I may not have all this information right now. That's okay. I'm going to give you some time to try and fill out what you can. Remember, it starts as estimates most of the time. Sometimes you can go back into your bank statement. Sometimes you have, things that like invoices and stuff in your email, and you can see how much things cost. It's okay to kind of not have all the answers now. And please be assured that I'm not going to ask you to present this, to the class or to me or whatever. This is just an exercise in trying to begin to build a budget. As we've been going through this pandemic and the resultant crisis, it's just made me feel more and more compelled. Although I do normally do a financial literacy segment in this class, more and more compelled to make sure that that the students who I'm teaching are using the tools that are available to them to try to plan, because of the fact you can see that for many Americans and maybe even some of us, we can't even afford to lose one paycheck, and then there's already trouble. So getting out of trouble kind of starts now by trying to see how we budget and what's possible, and having emergency savings so that should something strike us, we won't, be destitute after 1 month of not earning any income. So let's pick. Sorry, did you say something?
Yeah, where do we find this?
Oh yeah, so okay. So they're all personal finance budget.
Oh, okay.
You can download it from here. Sorry, I should have started with that. Everything that I'm using on these calls is in this list for last week and this week. So you can download this to your computer, save it, and then I'll give you guys. Let's do like maybe we do 10 minutes and a check-in, and then if we need another 10 minutes and a check-in like that, we have time to build the budget. I just, I don't want to have just dead air for 30 minutes or something. That doesn't make sense. Did you find it, Tanisha?
Yes, I found it.
Okay. Everybody else has it?
I have it.
Mm-hmm. Got some very quiet people here. Guys, if you don't have it, please download it from the Blackboard website. All right. Okay, so I'm gonna pause the recording here Yes, someone's thing for me. Okay. I'm gonna pause the recording. I'm still here and give you guys 10 minutes to work individually. What you're doing now is just trying to estimate amounts that might go into these various cells, right? Look at how much you earn and so on. And again, if you don't have any expenses, maybe pretend that if you did have to move out of the house or something, how much would you have to pay? What does that mean in terms of your situation right now? Or if you are living at home and you do have some income, just think about how you're spending it now and whether you can actually have some savings. So I'm going to pause.
I got to the fixed expenses.
You got the fixed expenses. Okay, so you're still busy, is what am I understanding correctly?
Well, what if the other ones aren't really like? Because I seen the other one with the nails and whatever, but it's like, what if I don't
Yeah, it
really?
could be in NA, not applicable, but I mean, out of a list of 20 things or whatever, you might have one or two that do, in fact, apply. Do you know what I mean? So you can still, is it fair to still keep going a little bit? Another 10 minutes?
Yeah, another 10 minutes would be nice, actually.
Yeah, I mean, I don't mean to rush the process. I just don't want people to feel like they're sitting there twiddling their thumbs. So I'm happy for us to. Normally, I give about 30 minutes for this exercise, but we're not that many people, so I just want to make sure that I'm not keeping you when you're already done. So 10 more minutes, and ask me questions while you go through. I'm still here.
Okay.
They spend around 300.
Mm-hmm. Okay. And you're saying, I guess you can say so, meaning you are,
Yeah,
like you
like
expect
around.
to
It's
end up
about
with a
200.
surplus.
It's about 200 to 300 like monthly for like fixed expense,
Mm-hmm.
and that's about it. That's why.
Yeah,
I
that's
didn't
fine.
do the yearly one.
No, it's okay. You don't have to do it yearly. I guess the point that I'm trying to make with someone like you who has very little, going on by way of expenses, it seems that there should be probably an expectation that you end up with some money left over, right? At the end of each month. Is that
Yes.
fair? So
Yeah.
then, then you're in a prime position to then say to yourself, I'm not saying you have to do this now, but you have to say, okay, what goals can I set, right, for myself with the position that I'm in, with the surplus that I have, instead of either just not knowing how much that should be, or not being that phased by it, or just seeing the money in my account and my account looks full and not sure if it could have been fuller. Now is the time to figure out how you can build a good practice of saving and possibly even investing depending on your situation. Do you follow what I'm getting at?
Yeah.
Yeah, so there's going to be different scenarios with budgeting. There are going to be people like you who are actually in a very good position where you have way less expense than what you're bringing in, so you can focus on goals related to savings and investing. There are other people who, I remember Tanisha shared with us last week that she was some years back having many demands, on her finances, and she had to find a way to pay down certain things. So there are other people who are going to budget to try and find wiggle room because maybe they have excessive demands on their finances, whether it be debt related or whatever, and they have to pay that off, right? There are going to be other people that say, well, I don't even have an income right now, I'm just staying at home. I don't really have anything to pay for. But then to those people, I would say that your situation is probably going to change at some point, and you should have an idea of what your parents or your guardians or whatever are spending on you, every month, so that when you eventually decide, I want to strike out on my own, you have an idea of what that's going to cost you, so that you're not like me. I remember the first month, after I started working, and I mean, I told you guys this before, that I studied finance, but no one ever told us anything about personal finance. We were just studying corporate finance. The first month when I started working, I got my paycheck. This was, before the days of direct deposit. And I just burst out crying because I realized that, I had rented an apartment. It was very small, like a very small thing in someone's backyard. I had a car that that I had to put gas into. I had all these expenses I'd already committed to, and didn't truly think about, what my after-tax paycheck was going to be, because I was just thinking about, pre-tax numbers, and just generally being, I mean, I don't want to say silly, but just not thinking carefully and budgeting. And so for most of the first year that I was working, I would have to use my credit card to supplement for just regular expenses, because I didn't have enough money. Had I maybe been a little bit more thoughtful about it, I could have actually drawn up a budget of everything that I was committing to, and maybe even spoken to someone that I knew working at the company to say, what do we actually take home, in terms of pay, and realizing that I needed to make some adjustments, right? So that's why, even if right now you're not paying your own way, there's still the encouragement to figure out what things cost, so that one day when you are paying your own way, don't be like me and be shocked about what it actually costs to sustain yourself. All right. Anybody else want to share any interesting findings that they had while they were doing their budget? Especially the folks who are somewhat silent. Anything else that you found? Did you find any money that that's supposed to be in your bank account and you're not sure if it's actually there? That's the
That
classic.
would be a joy.
Yeah, but I mean, that's the classic problem when we start building budgets. People are like, oh yeah, based on this budget, every month I should have like $500 left over, or $20 left over. And it's like, but where's the money? Tenzin, Tanisha, Jackie, Hinchi, what are you guys seeing? Again, you don't have to speak specific numbers to me. I just want to know if you were able to at least build out a little bit and maybe find one or two interesting things that you didn't expect. crickets. So that either means that you're not surprised by your budget, or that you don't want to talk, right? So, all right. I guess the point again of the exercise is to try and see how your finances are stacking up in relation to where you think they are. So if you did find extra funds, remember your first port of call, if you found extra money, is an emergency fund you want to start building. Remember, the emergency fund, you're looking at 3 to 6 months of expenses. And the reason it's so high, the number of months and so on, is that in general, the average that, folks say is that if you are laid off or something, it sometimes takes up to 6 months to find another job. So you want to be able to at least have some money in your emergency fund. And then after you build up your emergency fund, you want to be thinking about other savings or investing. If you are still in a debt situation, which is totally normal for many people, you might be concerned about, do I pay off my credit cards, or do I make an emergency fund? What do I do? It really depends on your individual circumstance, but for the most part, the recommendation is that you save at least a little bit of money every month and still pay, if you can, more than the minimum on your cards. If you have multiple credit cards that you have to pay off, then the recommendation is normally to start by paying off the smallest balance first, so that you can, I guess, get that sense of accomplishment and have have one card that is down to zero. But then of course, don't go back and spend more money on it. You can also call credit card companies to speak to them about negotiating terms, maybe of interest rates and things of that nature. If you do suddenly get a whole lot of money that you are able to use to pay off on your credit card, like let's say you get your stimulus check and you realize that you can use it to pay off debt, you may want to call the credit card company first and say, I'm going to make a big payment. Is there anything that we can negotiate around the balance or around the interest rate or something like that? I think, too often as individuals or consumers or, just people in the economy, we are almost conditioned to assume that we have very few rights when it comes to negotiating with banks and with card companies and so on. That's just not the case. I mean, all they can say is no, but you can go in there with your, whatever your story may be, and just try to get them to work with you. Also, I mean, there are the options of transferring money to a 0% credit card, but there you have to read the terms very carefully. If you do that, you probably only have a shortened period of time where you can pay off the balance. Otherwise, that bank will start charging you interest again. So there are strategic ways in which you might be able to move things around in order to help yourself. If anybody wants to talk about this further, like I said, I mean, this is part of my background, so I'd be happy to talk you through maybe your individual situation. Of course, I'm not a financial and investment professional, but some of these things are very much what I've learned as part of my studies and part of my experience. All right, so that's the basic budget. I just want to go back here and just maybe quickly go over what some of the other things are that we haven't touched on. We don't have to go deep into this debt piece. I just wanted to show you guys some of the stats and so on. And, part of today was also supposed to be talking about time management. So I'm not managing my time that well. So I'll have to see about how we will maybe do some of it today and then maybe next week. So at the beginning of all of this, remember I said that there were a number of topics that we were going to cover. We've already done budgeting, saving, debt, and investing is next. We've spoken about savings already. So we'll just talk a little bit about debt and then about investing briefly. Investing could be its own separate course, so I'm not going to try and tackle too much of that. Does anybody know what we mean, if there is such a thing, and what is meant by good debt and bad debt? Is there such a thing as debt that can be good? Or is that just crazy?
I mean, I guess.
Mm-hmm.
Because okay,
yeah.
so like student loan, right? Like long term, like after you don't pay that off, that's gonna help you a lot to make a lot of money for a good debt. But bad debt, I guess, like something, it's like a want, something you buy with it, like a car or something. Well, not a car.
But maybe just you take a nice vacation that you can't afford on a credit card, right? That's you know, I mean, you might say it's not bad because I enjoyed my vacation, but once the vacation is over, guess what? You're still stuck with the bill, right?
Yeah,
you're totally on the right track there. Totally on the right track. So good debt, quote unquote good debt, is often considered debt that has some type of either an asset that is tied to it. So for instance, a mortgage, you know, because you've got the home and then you've got the mortgage loan. So in a way, going into debt, unless you're again living beyond your means and buying an apartment that is way too expensive for you and so on, or, you know, going into like a car note that is just unreasonable or something like that. The good part of it is meaning that it's secured in some way. So, you know, there's the mortgage loan. Just like Andal was saying, student loans can also be good debt. You just have to be so careful. I mean, we're in the business area, so it's kind of a little bit better for all of us, because with a business degree, you're generally going to have quite good earnings potential. Whereas, you know, with some other degrees, your earnings potential might not be as great, or that industry may be having problems, you know, by the time you graduate. And so you're stuck with this debt that you may not have a capacity to pay back, you know, in good time. So even when you do consider taking on student loan debt, if you are, you want to be thinking about how much debt are you willing to take on, what's the interest rate, and how will you be able to pay this back, you know, at the end. Some people even think like, okay, I'll do my bachelor's, and maybe you're not in so much debt from your bachelor's, but then they go straight into maybe a master's, like an MBA or an MS, and then they just go into more debt. And then after that may or may not find you know, work. And sometimes I'll recommend to some of my students to say, you may want to finish your bachelor's and then consider actually going to work somewhere first, instead of just staying a student forever. So you go and work and you figure out what it is that you enjoy. And then sometimes you may even find that the company that you work for is willing to pay for part or all of your graduate degree. So that actually saves you a lot of money, and you come back to school kind of having a better idea of what it is that you want to specialize in. So that's all, you know, that's again, student loans can be very good debt, and depending on how you plan for the future, could also end up getting you know, us into some problems. Does anybody have a wild guess of what the total dollar amount of student loan debt is in the US? Any idea?
Millions, probably.
Trillion.
Okay.
Trillion.
Wow.
1.5 let me see if I can find it. Yeah, it's this is just for individuals, but here's the total amount. It's 1.5 trillion. And the average debt per individual, I know you guys are probably not at these levels because most of the LaGuardia students end up graduating debt-free. But, you know, this type of thing can start happening once you go for your bachelor's or whatever, if you don't already have student loan debt. So some people end up with, you know, an average of 30 grand in debt. And the sad part about this is that the interest rates, you know, that we get charged for this debt are really high compared to the interest rate that is, you know, currently happening like the Fed funds rate right now is close to zero. But you'll find that these companies, often private loans and stuff, they're charging like exorbitant interest rates. So even with that, when you consider taking debt out, maybe for your bachelor's or something, just be careful about the looking at what the interest rate is, looking to see from when interest accrues. I mean, is interest being added on immediately? Is interest only being charged after a while? How soon do you have to pay back the debt? I mean, and tuition has gone up exponentially. I'm sure you guys can attest to this. The cost of college has gone crazy over the past whatever 30 or 40 years, and you might say, well, this is maybe the greed of the administration or the greed of the school. What I can tell you is it's actually a little bit more complicated than that. It's actually the fact that, frankly, for the most part, state and city governments have drastically reduced the funding that they give to higher ed. I mean, drastically. So if the colleges are supposed to survive, then they have very little choice but to try to increase tuition. Otherwise, they won't be able to function. So that's unfortunate, because then the tuition is obviously what the students are paying, so it's ending up going higher and higher, and that's also resulting in more student loan debt. So 1.5 trillion is the number that we're looking at. For most LaGuardia students, I mean, we're talking about Pell grants and TAP and so on. So for the most part, the financial aid is a grant. The difference between a grant and a loan is what? How is a grant different from a loan?
A grant you don't have to pay back, and a loan you have to pay back.
Right. So if you ever want to know what it is that you got in terms of financial aid and you're not sure and so on, you go into CUNY First. You'll be able to go into the financial section there of your CUNY First and look to see what was awarded to you. Sometimes you also have to go in there anyway to accept what was awarded to you, because some students, I've had in the past that didn't realize they actually had to click to accept the grant award, and that it wasn't just automatic. I don't know if the system has changed since then, but that's how it was before. So you always want to be looking out to see what it is that you were awarded. For those of you who are international, this won't apply to you yet, but you're becoming residents eventually, and so the whole FAFSA thing and loans versus grants, these things are important. There are obviously also scholarships and so on that are available that can also help to alleviate the burden of paying for school. I'm not going to say too much about this. I just want to mention that household debt, and you can see what all it comprised of: mortgage, home equity, line of credit, car loans, credit cards, student loans, and so on, is at 14 trillion. As of 2019, the fourth quarter, which means like September through December of 2019, very recent numbers. This is a staggering amount of debt. It's more debt in the households than before the financial crisis of 2008. So basically what we're saying is, when we think about the impact of COVID-19 and how, as of now, I think about 26 million people have filed for employment across the country, unemployment, across the country. And many of us are struggling, battling, just to make it month to month. That whole situation is made even worse by the fact that people were already in debt, before the pandemic hit. So, if you think about economic recovery and things of that nature, we have to factor in, that the US is an economy that is almost built to some extent on consumer debt, and that, a recovery is also going to involve, thinking about the amount of potential defaults that people will have because of the fact that whatever paycheck that they are waiting for, unemployment and so on, is going to have to go for, day-to-day needs. And so I think repayment of debt for a lot of people is actually, frankly, on pause right now. Any thoughts on that? Are you shocked by that number, or is it as expected?
But honestly, I know about the number.
You knew about it?
Yeah.
Good. Good. So that means you're reading the business news, right?
Yeah, sometimes.
Yeah, that's great. If you're a business student, you know, that's what I want to hear, that you guys are engaged with you know, broad concepts at least in, you know, in the economy. So you knew about it. Were you shocked by it the first time you
Yeah, the
saw it?
first time I was shocked because that's a lot of money.
Yeah, it's a lot. And now the government is printing money. So the government is in even more debt than they were before. I think before the pandemic, the government was sitting at a deficit of about 1.5 trillion. Most of it attributable to the fact that they cut taxes so drastically in 2018. And following all these bailouts and things that have been happening, they're looking at a deficit of about 3.5 trillion. And the printing of the money eventually, I mean, if there aren't proper you know, policies put in place, can also result in inflation. So, I mean, that's, you know, that's the economic side of things. So it's a little bit of a mess that we find ourselves in. But what can we do as individuals? What we can do is what we have been doing, budgeting, trying to figure out what we need, you know, from a living perspective versus our wants, and trying to figure out how we can hustle, right? If you have a job, that's great, you already have a job. If you don't, you know, what kinds of work is on offer now. I was just speaking with one of my colleagues yesterday who was saying that, you know, the government is actually hiring a lot of people to work from home, doing things like contact tracing with this whole pandemic, you know, that's going on. There are other opportunities now, like in our current reality, where you can actually make additional money. So we should always be thinking about how we can be flexible in our thinking around, you know, our finances, and also how to enhance our financial position. Because like we just saw now, you never know how things might change fairly quickly. If anybody wants to know about the, you know, the job opportunities that do exist in this time of COVID, feel free to let me know, because I can ask my colleague for the link and send you the information about the contact tracing. And it's not just for LaGuardia students, it's for anybody. So if you know anybody who's looking for work or whatever, I'm happy to pass those details your way. I just don't have them right now. Okay. I won't go into, you know, average savings rate and all of that. I'll just say broadly that we don't save, as you can tell by the 14 trillion of debt, that, you know, in the US, we don't save that much. I'll flash this savings plan again that I gave in the first class, you know, the week one, $1, week two, $2. You know, it seems a little bit corny. When I first saw it, I was like, oh yeah, whatever. But then I saw at the end, you know, you have $1,400 by the time the year is through. And so then you can take your vacation without having to put it on your credit card, or you can buy your holiday gifts if you want to, or you can pay off debt or whatever. So what's the point with savings to me is really to figure out how you can just automate it. So if you, like Andal, you were saying, you know, you do have excess funds at the end of the month, you know, maybe you have this is just, you know, an idea. You have, if you don't have this already, a separate account where you kind of just sweep whatever's left over into a savings account so that you don't touch it. And by the end of a few months, you realize that you've probably already built up an emergency fund for yourself without even trying. Any questions on debt and savings, or any comments that anybody wants to make? Okay. So, like I said, the investing piece is, you know, I could go on for days about this, and it may not be as relevant if you know, don't have excess funds, or you're just not interested. So I'll just speak about this. When we say investing, we can talk about, you know, putting your money into some type of financial instrument that you're hoping is going to make you some money. So it could be things like stocks, You could invest in bonds, which is kind of investing in the debt of someone else. Real estate, so buying properties. Exchange traded funds, which are almost like stocks, except that it's a number of stocks together in a type of a basket of stocks, and mutual funds are the same. So, this is only an inkling. I mean, there are other things, cryptocurrency, Bitcoin, derivatives and so on. I didn't put that on the list because, those are even more specialized products. Any idea why I'm even bringing this up? Why do you guys think you should invest, or why not? Like, what do you know about investing? As someone said to you, it's like gambling, so why are you doing this? What are your thoughts?
Honestly speaking, I haven't invested, but my friend been talking about investing all the time. They like, most of them invest and they say like it's great, and some of them say, oh, it's bad because they lose. But I don't know much about it. I haven't really looked into it, but I want to know about it.
Okay. So why invest? People are doing it, but you don't necessarily, it sounds like you're saying you are curious, but you don't necessarily know, where to start. Is that
Yeah,
a
that's why I
fair
haven't tried,
assessment?
because I don't know what's the first step, like what I need to.
Yeah.
I don't want to just rush into it and just
Yeah,
get
no,
a
you
big
shouldn't
jump,
rush.
so.
You shouldn't just rush into anything. I think the first step I would say is, just like we did the budgeting, you build your budget, you see what you have in excess, you build up your 3 to 6 months of emergency funds so that if anything happens to you, you'll be able to still cover your expenses for that amount of time until you get another job. And then, with whatever excess funds you may have left over, you can then decide if it's something that you want to do to invest. So why invest? Because, I mean, first of all, if you think about just leaving money in a savings account right now, the savings accounts are basically returning almost 0%, right, on large sums of money that people might have in the account. So it's not really helping your money to grow. In fact, if inflation is 3% or 10% or whatever, you're actually losing money by leaving excess funds in a savings account. Now, the problem with investing for many people, including, people like us, whether it be immigrants, people of color, et cetera, is that we aren't necessarily always encouraged to invest because there's this maybe notion that it's like gambling, or you're just going to lose money, and what's the point, etc. So here's where we kind of have to be careful and say that you're right, Andal, you shouldn't just jump in. You should be thinking carefully about what it is that you're trying to accomplish. Now, what I will say is there are many people who are, investing day to day. I'm talking about like stockbrokers, analysts, and so on, who have all the power of the systems behind them to do all the research and, find all the ways in which to, as we would say, like buy low and sell high on individual stocks, and it's actually their day-to-day work. And so, when it comes to like investing in individual stocks, I would normally say to my students, especially in the finance club, that you want to be very careful with things like that, because that's often where people make decisions that are based on their gut instead of based on their head. Because if you aren't, like, let's say you say, oh, I want to invest in, some upcoming, tech company or something, if you aren't actually looking at their financial statements and listening to the earnings calls or getting some type of investment research from somewhere, then just like anything else in life, what are you basing your decision on? Oh, this is like the latest, hottest thing, so I'm just going to jump into it. And then as soon as something happens with the price, you might feel, oh, I need to sell, or I need to, I need to buy more, or whatever, but it's still not based on actual facts. So the way I would say for someone who's just starting out is, I would say that you probably want to be in what we would call, and I'm going to write it here in the chat window, you probably want to be in what we would call an index fund. So what that means is you're basically putting your money into an exchange traded fund, which consists of a combination, right? It's going to consist of a combination of stocks that are tracking the market, or in fact representative of the market. Okay, so one of my investments I have is this thing VOO. It's a Vanguard, and I'm not saying that you should invest in this. I'm just trying to give an example. It's a Vanguard index fund that tracks the S&P 500 is an index of 500 companies, and it rises or falls based on how those companies are doing. And why am I saying that? Because if you don't yet have experience and you don't have the time and inclination to be researching, any particular stock, but you want to be in the market, you can start here with, start with a fund that is actually tracking the market, or you can look for exchange traded funds that track a specific industry, right? So let's say you do want to invest in tech, but you don't, have the time to look at just one tech company. You probably want to maybe first look at investing in a diverse range of companies in that industry, so that maybe one company is going down, but somebody else is going up. So you are mitigating some of your risk that way. And then as you understand more and more about investing, you can maybe start dabbling, if you want to, in individual stocks, as your research allows. And of course, with these exchange traded funds, you want to look at historical returns to make sure that they are doing they're doing well, and also look at fees. The fees should be very low, because it's what we call passive investing. You're just investing in in a basket of stocks. You're not trying to research individual stocks. Is that making some more sense? And
Yeah, that's making more sense.
Did I drive you crazy with all this? And where and where do you start? You can start with looking at a platform. Example could be E-Trade, or any, like if you're with a bank, maybe your bank has your bank trading platform. You can also look at, although they had a lot of problems when the market was crashing, but there's Robinhood is an app that you can also use for investing. But Robinhood was kind of bragging that they don't charge you brokerage fees, but then all the other brokers stop charging fees as well. So Robinhood is not necessarily, now as attractive. So if you bank with, let's say you bank with TD Bank or something, they might have their own trading, platform, or Fidelity or whatever would have its own trading platform. You can shop around to see which one you want to use. And it basically can happen online. And you would just, look to see what you want to invest in, try and figure out how the price has been trending. Like, there is some legwork. And when you say, your friends, some say, yeah, it's going great, and some say it's not going great. The reason is that they're probably all investing in different things with different strategies and so on. So, it's always going great if you're making money. So, but that doesn't necessarily mean that person's choice is superior to somebody else's choice. It just happens to be that the way the market is moving at this time is that, maybe one sector or whatever is doing well. Anybody who's invested in oil right now is like losing big time, but not too long ago in last year they were crushing it. So it's that's the other part about investing. You have to think about your horizon, like how long are you willing to leave money in an investment without trying to cash out because you're panicking, right? So I'll give you an example. When in the 2008 crisis, and even now, I mean, I have retirement investments in stocks. In 2008, 2009, 50% of my retirement was wiped out. And, I could have panicked at that point and said, I'm cashing everything out. But because of what I know about finance, I was like, no, I need to leave this in, because eventually the market will come back. and it didn't just come back, it came back with, the longest rise in the stock market in the history of the country. So you also, when you invest, we're not talking about day trading, like buy the thing now and sell it tomorrow. You're talking about, and that's why I said you build up your emergency fund first, because you're talking about putting money into something and saying, I've done enough research to be comfortable with this investment, and I'm willing to kind of ride this out and not just jump in and out, every time something happens. Make sense?
Yep.
Why invest? More questions about this for those who haven't convinced yet. And again, I'm not trying to tell you to go and put your money into something today or something like that. I just feel like, and this is heavy on my heart, and forgive me if I become dramatic here, but like I said, as an immigrant, as a person of color, which a lot of you can, or minority, a lot of you can relate to this, we are not encouraged to build wealth in this way. Predominantly, if you look at who is invested in the stock market and so on, it's not people like us, heavily invested, because we're either taught that it's wild gambling, or we're taught that that's just not for us. But yet it's one of the biggest ways to build wealth, in over a lifetime. And if you look at this thing that I was talking about here, the impact of compounding, you'll see this concept coming up over and over again in your business studies. Basically, it's saying that, if you are earning a return on some type of amount of money that you are investing, the returns will earn additional returns, and so on, until, if depending on when you start investing, you could easily outpace, your peers or people like, so I'm 40. So if you're 22 or you're 20, or even if you're 30, even if you're 35, if we start investing today, right, and we invest the same amount of money, because I'm 40 and you're so much younger than me, I will never be able to reach the same amount of returns as you, because time, is the biggest gift that you guys have. If you're still young, or if you're younger than me, time is going to be your biggest gift if you're investing, because you are able to get those compounded returns over time. And so here's an example of investor number one, who starts at 25 years old, sets aside $5,000 a year, which sounds like a lot of money, but remember, you want to divide, if you say 5,000 for the year, what is that per month? It's about $400 or whatever. And does that make sense? Can I save $100 a week for retirement? And stops investing. This is what's crazy. This person stops investing at age 34. They don't even continue, right? So they only invest for 9 years. The second investor starts at 35, invests the same 5,000 each year for 30 years until age 65. We're assuming an 8% return. And this is a reasonable assumption, because over time, studies have shown historically that the stock market returns about 8%. And it's compounded because you're leaving your money in the investment. You're not cashing out every other day or every other month. You're just leaving the money to grow. So the person who invests for 9 years and stops comes out to 787, 180, right, at age 65. The person who's investing for 30 years, not 9 years, but 30 years, only comes to 611, 730. They can never catch up, because they started 10 years later than investor number one. What do you think? Are you surprised?
Professor?
Mm-hmm.
Yes, so I've been interested in investing for a little while.
Mm-hmm.
But it's a matter of me not really knowing the literacy of the whole investing thing. So it's like I'm scared, because I don't know really where my money's like going. That's the conflict.
I hear you, and I see you, and I get it, because it's really scary to say, oh, I'm putting money in somewhere. Will I ever see it again?
Exactly.
Right? Right. So first of all, I'll say follow what I was talking about before, where you want to make sure that you have all your emergency savings and funds and things in order. Because once you start, like the money that you use to invest with, I would discourage people from expecting that money to somehow serve as, money that you can just like, oh, oops, I need to pay a bill, so I'm just going to sell some of my investments to do that. It's a little bit more clunky than that. But so if you're interested in investing, you heard some of the stuff I said to Andal, right? I think, right, Tanisha?
Yes. Mm-hmm.
Yeah, so I think the first point is to say, to ask yourself, and you guys could even think about this, because there is that financial literacy reflection that I'm giving you also. What is your goal, with investing? So do you already know what your goal is?
Well, my goal, I guess, is to, I don't want to say it's necessarily for retirement, but like.
Yeah, but that's a good goal.
Right. But like if something were to happen to me, God forbid, or like in this pandemic right now, I know I had my money somewhere or whatever. If I've been saving for years, so I wouldn't have to be like most people who are unemployed and stressing and all of that. So it's like I know I got that money somewhere, like just for an emergency.
Yeah. Well, an emergency over and above whatever emergency funds you might have already. You're saying, I'm trying to, it's, for lack of better terminology, almost like the investments can be like a side hustle where you're saying, these excess funds are going into this brokerage account no matter what. And I'm building up wealth for myself on the side so that one day, whether it be, for retirement or whether it just be that I actually have this money, I don't have to run scrambling when something happens. Is that fair?
So because I heard people say investing in like Amazon and Apple and stuff like that. So I don't know if they make like.
Yeah, the issue comes back to, again, this is what I was saying to Andal as well, that you want to kind of be clear when about the goals of your investing and the time and energy that you can spend, looking at different companies and different investment instruments, because people are thinking Amazon, Google, whatever, because those are the names that are constantly coming up. Those are the stocks that have had exponential growth over time. But by the time we on the street are hearing of some of these names, I don't want to say that it's too late, but it's, do you have, like if I have to go here, just for argument's sake, do I have $2,000, lying around somewhere to buy one stock in Amazon? No, I do not. I don't know if you do, but buying one stock in one company, Lord knows your whole day is gonna, be better or be spoiled by what's happening in this one stock of this one company. If we had gone into Amazon, 5 years ago, different story. But then you have to be clear that you were willing to stick it out, for 5 years. And at that point, did you have, $400 or whatever per share to invest? So, however, if you say, okay, I may not necessarily be able to invest in Amazon or Google directly, but then you can say, is there another type of, instrument, another way to invest in these companies without actually buying the specific stock? And that's when I was talking about this notion of exchange traded funds, meaning that it's something that you can invest in, like a single thing that you can buy, but it consists of almost like a slice of the stocks of different companies, maybe within one industry. So let's say you do want exposure to tech, right, technology stocks, but you can't afford the Google stock or the Amazon stock. You might then look at rather investing in a fund that is tracking how those companies are doing. Am I making sense to you, Tanisha? Because this is not, super easy stuff to follow.
Yeah, it's not. But
Okay.
I'm trying to get the gist of it.
Okay, so I'll give you an example of the one that I invest in, right? So this is VOO, right? So this is the Vanguard Index Fund, an exchange traded fund that follows the index, the S&P 500. The S&P 500 is 500 stocks, basically. So this is a basket of a slice of 500 stocks that I can actually, at that point, could afford to buy, because unlike Amazon, this is only 262 as opposed to 2,000 dollars for one thing. So I bought this. I think I bought it at about 200 or so, saying to myself that I don't have the time, I don't have the energy, and I don't have the, I guess, just the well, I mean, I have the brain power, but I just don't have the time and energy to study up one single stock to see whether I think the price is going to go up or down. So instead, I'm going to let somebody else do the work for me, and I'm just going to track what's happening in the market. And so do you see how over time, I know that everything went kind of sideways now because of COVID-19, but over time, these things are going up because the market is going up, right? So you can invest and you can benefit from investing in a fund that is just tracking the market, so that you don't have to try and sit and study up every single stock available. Is that making even 5% sense at this point? Eh?
Mm-hmm.
Okay.
Mm-hmm.
So what does this mean, right? For you, you could decide, and I don't know that it's necessarily that you want to, because there's two options, right? And I have two things as well. You can have a fund, you can have money that you invest just for retirement, which we would normally put in something like what we would call, let me just open a chat window. I'm just using it for notes. An IRA, I don't know if you guys ever heard about this. It's an individual retirement account, right? And if you put the money into there, then you can't touch that until you're like 59 and a half, all right? So that's, and I have that besides my other retirement stuff with LaGuardia, but that's a dedicated retirement account. But if you're just looking to put money into a place where you may still be able to access it, then you want to be looking for a brokerage account. Okay, where you are still buying the stuff, but you can buy and sell at will. You don't have to have like an issue where if you try to take the money out before you're 60, that you are going to be penalized in some way. Does that make sense? So it's two types of investing is basically, I guess, what I'm saying. So if I was sitting in your shoes today, and I said, I have some excess funds and I want to think about how to invest those funds, I think the first thing that I before you even think about what you want to invest in, the first thing you want to be thinking about is, how much do I reasonably think I have available, right, to invest? Do I want to make it, like a monthly thing where I keep adding to this number? How long, for what time horizon do I think I want to invest? So, how long, am I willing to kind of leave the money in whatever I'm investing in? Then you might be thinking about what platform. So let me type these things here again, right? So first of you, you're saying how much can I reasonably afford to invest? How often, right, will I invest? It's no use, doing some one-shot thing of $100 and then you kind of just forget about it for the rest of your days. It has to be something significant if you, based on your goals, that you were talking about, of almost having it as like a type of side hustle. You have to be thinking about being consistent. And then you're thinking about like, what is my investment horizon, which means like, for how long can I leave this money in there? Probably for as long as possible, but you never know. And then you're asking, what platform will I use? So will it be, like I was saying, like an E-Trade or my bank's investment platform, or what? try and identify where you might start putting in your money. And only then do you start with, which instrument, instruments, I guess, will I use? Will it be stocks? Will it be exchange traded funds? What am I doing? And then you can also ask yourself, how much time can I devote to managing my investments? And what I mean by that is just reviewing what's going on, adding to it, etc. And I'm happy to talk to you guys more. I mean, Andal and Tanisha both expressed an interest in this. Normally, like, the sad thing now with being on lockdown is that normally I run the finance club, I mentor the finance club, and we have an investment simulation that we do every semester, it's basically through Investopedia. They give you $100,000, like fake money, and you can practice investing that way. I don't know, I feel like people are so overwhelmed with work that I don't want to create another thing that you have to do. If someone wants me to set that up for you to be able to tinker around, I can. However, I also think that maybe you can talk to me about specific questions that you might have, because like I said, this is a very heavy burden on my heart, that people need to be more informed about how to invest, because the wealth of the country, frankly, is locked up in the stock market, and also to some extent the real estate market. And then some of us will never be able to participate because we are not receiving the guidance that we need. And then the tragedy, of course, and this is what Tanisha was also talking about, is people in retirement thinking that they have enough money to survive on, and then realizing after the fact that either they have to go back to work or they just can't afford to retire. And you guys have access to this whole presentation, but I just want to show you. And to Tanisha's point, you were saying not just for retirement, but it also does need to be for retirement, because the recommendations are here for how to invest for retirement. By the time, so I'm 40, right? So by the time I'm 40, I'm supposed to have 3 times my salary in my retirement account to be sure that I will be able to survive. Because remember, most people's, and pandemic notwithstanding right now, but I mean in general, most people's expected life after they retire at 65 or 67 is still a fair number of years. By 67, you should have 10 times your salary. And here's another table that kind of goes through this as well, telling you for each age that you are at, if you're working, how much money should you have saved already by that point. And then this one didn't render as nice. I just wanted to show you this, and we can come back to talking about investments. This is bankrate.com. You can actually go in and punch in numbers and see what it tells you about retiring. So if someone was 35 today and they were planning to retire at 67, and their household income is 130,000 a year, and they're saving the recommended 15% of their income per year for retirement, and they only have 100,000, right, in retirement savings, which is low considering what we just heard. And this is what they expect the income to increase by. This is how much money they'll need at retirement. They think they'll still live until 87. What does this thing tell us? That this person will actually run out of money by 75. So they'll have 12 years when they're pretty old. If they do live to 87, they'll have and this was actually me a few years back when I did this. I'll have 12 years, or I'll have 12 years of not having income, or I will have to drastically alter my standard of living in order to stretch my money. And what's sad about that is you work your whole life to hopefully retire and be able to enjoy, the fruits of your labor, and then come to find out that you now have to scrimp and save. And I mean, let's have real talk, right? The Social Security fund is going to be depleted in a few years. I don't know if the government is planning to print more money or what, but right now, those of us who are working are paying the Social Security for the retirement of those folks who are old now, and we are in an aging population. So there's a lot of people who are drawing Social Security because they've retired. And those of us who are coming, in 25 years when I'm trying to retire, I can't count on Social Security. I have to be, coming back to our point here, I have to be investing for myself, because I could, decide, okay, I'm going to get the 1,200 or whatever bucks of Social Security every month, and I'll at least have something. That money may not be there anymore, because the age at which people, the age to which people live in this country has increased drastically since the Social Security fund was created, but the government never increased, the age at which you can start drawing Social Security. So there's a mismatch, and that's causing the fund to go down much faster than it should have, based on, how it was set up. So, back to Tanisha's point and Dal's point, we should be thinking about investing. If you're working for a company that has what we call, and I don't know that anybody is, but if you're working for a company that has what we call a 401k, which is a retirement plan, many of these companies will match your investment. I worked for a company like that, Deloitte and Touche. They said for every 3% that I invested, right, they invested 3% as well. So of course I'm going to invest at least 3%, because then they match my 3%, so it doubles my money that's invested for retirement. So please, you won't be with me anymore, but as you progress through your bachelor's, or if you're already working for a company like this, please make sure that as soon as you start working, that you invest something in this type of retirement fund. So let me ask you this now: what would be helpful for those people who are like really interested in investing? How can I help? Like, would it help you if I typed up some document with pointers? Would it help you if I set up the simulation in Investopedia? Would it help you to just talk to me during office hours? Like, how can I move the needle for you so that you can actually meet some of your investing goals?
Maybe that simulation would be really helpful.
You think the simulation will help?
Yeah, like so we can get like a real feel for it.
Yeah, before you dip your toe in the real deal. Okay, so the simulation is fairly easy for me to set up. And what about other pointers and stuff, Tanisha? Like what? So, and Dal gave me one idea. What would be helpful to you right now? I mean, this is not pressure. Like, obviously you don't have to start investing now, but I feel like we're going to have this conversation, and then we're going to say, oh yeah, this is great. And then, then what? Are you still at
I mean, you could do the pointers as well.
Okay. Did we lose Tanisha in the process? Okay, I don't know. Maybe she fell off the call. No, she's here. Tanisha, are you there? No, maybe she stepped away. Okay, so anything else for the people who didn't say anything? If you're interested in investing, is there anything that I can offer you in terms of support?
No, I actually knew about Robinhood for a while. I invested at like $5,
Who's
like a
speaking?
few
Is
things.
this Jeremy?
Yeah,
Hi. Yeah. Okay. Yeah. Good. So did you put some money into Robinhood?
yeah. I
Alright.
try to do like some Amazon stuff, but like I pulled it back out because I had no idea what I was doing. I was just like,
Yeah, I mean that's the struggle, right? That and that's why we were talking about maybe starting with either like a simulation where you can see what's happening and it's not your actual money that's going into the thing, and also just talking it through. You know, the risk of investing in individual stocks. Versus maybe investing in an instrument that is actually a combination of stocks that will help you, you know, if one stock is going down, maybe something else is going up, and you don't have as much exposure, you know, to the market.
yeah. You
Yeah.
know,
So go
the
ahead.
the stock you showed the example, the
Are
Vixar
you
one.
talking about this one,
Yeah,
Vanguard?
yeah. The Vanguard one. My friends talk about that a lot because
Yeah, I mean, it's tracking. It's to me, this is a pretty basic. Like I'm invested in this just because, you know, at some point, like having a day job and having a kid and everything, I don't have the bandwidth to be studying individual stocks all the time, or otherwise I have to pay, you know, for like a paid service to do that. So I just went with Vanguard because their fees are really low compared to some of the other funds, and it should be low because they're not really doing anything. They're just tracking the S&P 500 index. So that's how I made my
yeah,
decision that I just want to follow. I just want to track the market. Whatever the market is doing is what I'll be doing, because I don't think I'm smarter than the market. People are being paid, you know, hundreds of thousands or millions of dollars to study the market. And I'm not, you know, up to their levels. Even though I do understand the market, I just don't have the time. So I'd rather let somebody else do the work, and hopefully, you know, I can
yeah.
at least take the gains that the market, excuse me, is taking. Of course, you know, as the market drops, I'm also dropping, but what's happening to me is happening to everybody else. You know, so I
Yeah.
don't, so I can almost like in a way set it and forget it, because I'm like, I'm invested. That over time, studies have shown that the market always goes up. Even when it crashes, it will eventually come back
Wait,
up.
but let's say it crashes like drastically. Like,
Yeah, so it crashed
will
drastically
it
when
take
when
away your
Obama
money?
came into office. Huh?
Will it take away your money? Then you're gonna have to owe them money.
No, no, no. You can never go below zero.
Oh, okay.
The most you can lose is what you put in. That's the thing with stocks. I mean, you can't go negative. There's no way. The stock will
Yeah.
just become like defunct, basically. It will just be at zero. So people were invested in like Lehman Brothers and so on. When the market crashed, you know, 809, the stock goes down to zero. You lose everything, which is obviously not great, but you can't owe anybody anything.
Okay.
As long as you're not, I mean, I don't want to get too technical here, but as long as you're not like shorting stocks or trading on margins, there are times when people borrow money to buy stocks. And then if, you know, something happens with that trade, you might owe the money that you borrowed. But I'm talking about like just straight, if I just put $263.42 into the stock right now, I would, if the stock goes down to zero, I'm not going to owe anybody anything. I just would have a massive loss. Does that make sense?
Yeah.
So even here, I mean, there are other options for ETFs. It's not just this one. There's the Spider one. There's all kinds of stuff. So what I'll also do is maybe try to find a good listing of exchange traded funds that I can share with you guys. Like I said, before you decide, and I went through this whole process, before you decide to invest in a fund, you want to look at historical returns. You want to look at how much they're charging, you know, so you don't give up too much of your gains to fees. And so, because these are people who are sitting at a company that are, you know, managing your money and investing on your behalf. So they are going to charge something small. So there are some fees involved versus I also have a Robinhood account. So in my Robinhood account, I have a few Facebook stocks, you know, it's just kind of messing around because I don't normally invest in individual stocks. So versus like that, that's just me investing directly. So I don't have to pay anybody any fees. But when I use a fund, as soon as there's the word fund involved, then there's going to be some type of fee that you're going to have to pay. Okay, so I'll make the pointers. I'll try to make some pointers for those who are interested. I can set up a Investopedia simulation. I can try and find some listings of ETFs that might interest you. This is not a requirement for the class. Please be clear. Let's be clear. You don't have to invest in anything. You know, this is just, again, my point is about building wealth in different types of ways. And to Tanisha's point, about having something somewhere, so you're not breaking your back, trying to make extra money. You're actually letting the market to some extent work for you. All right. And I guess I just want to remind you guys that you do have this reflection, that the personal financial literacy reflection, where I want you to write a little bit about what we discussed in these lectures. If you don't know where to find it, it's over here in the Zoom call materials. And basically it's just asking you about, what is your attitude towards money, which we spoke about before. How has your view of personal finance changed because of the pandemic? What are some important points that you may have taken away from our discussion? How do you think you'll monitor your finances going forward, right, now that you have some additional information? Is there any goal that you have? So maybe for some of you, the goal might be to start investing or to start doing an emergency savings fund. And then I do have a resources list that I made available for you. It's over here, like a long, you don't have to go through each one, but it's a long list of all the financial resources. Investopedia is a great website to understand stuff. Annual credit report to pull your credit report. Mint.com if you want to track your spending and stuff for free. Fool.com is great for investing. And so on. So I'm just asking you to choose one or two of those resources and look into it and see if it might be helpful for you to use as you try to meet your financial goals. All right. So that's the personal finance segment done, but we can always still talk more about it in the coming weeks as people maybe have more questions coming up. This financial literacy reflection is due at the end of the week. But as I said before, I'm trying to be flexible with dates and people's circumstances. Here's your instructions on where to post it. You will have time, you'll have dedicated time during the Thursday class to work on this. All right, so you can wait until Thursday if you want to, and maybe you can even finish it during the studio hour, so you don't have to do anything after that. Any questions about anything before we move? Before we end, sorry.
So
sorry.
Yeah, go ahead, Tanisha, and then I'll take the next person.
So which assignments do we have? I'm sorry, I was a little in and out of this session.
Yeah, I gathered because I was asking you something at one point.
Sorry.
It's this one. So I'm going to have to shift. I'll show you now. Where's my master calendar? I'm going to have to shift the time management thing because I stayed on personal finance, which was fine. You only have this due, financial literacy, and you'll have time in the Thursday class to work on it. I'm going to shift the time management back probably by a week or something. So don't worry about that. I'll announce the change to the state because you guys can't really do the reflection. We'll have to talk about time management on the 5th, and then you can do the reflection in the class on the 7th of May. All right.
Oh my God, we only have a few classes left.
Yeah, we're almost done. For the people who missed today, it's too bad for them because they're only going to meet with us again like four times and we're out. So we've got the 5th, which is next week, then the 12th, the 19th, and the 2nd of June. And I have the 24th, but that's just a due date for something. We're only meeting 4 more times. And on the 4th time, June the 2nd, it's really going to be a little bit more like relaxed, just talking about what needs to be done, to just round out the semester, giving everybody like grades to date. And you can kind of ask questions about, anything that you don't know why it's, you don't have that thing, or why is it not reflecting, that you completed something. So it's almost like a checkup, and then we're out.
Okay.
Mm-hmm. So probably like 3 kind of meaty classes, and then that's it. So thank you everyone who came today. To those who came late, I hope you at least got some benefit here. If you came late, what I did ask at the start was please check your registration date, and if you didn't respond to the emails that I sent, and I know Anastasia, I know you did. I can't remember, Jeremy. I think we went back and forth. But if there's anything still on your degree plan that you need to finalize with me, please do so that you are able to confidently register for whatever you need to register for the fall 1 and 2. And again, if you are having trouble registering with any classes, let me know so that I can help you. All right?
Yeah. Yeah, miss. I'm really sorry I was late today. My laptop, like, I woke up, it was dead, and I had to rearrange my room yesterday. I'm not trying to make excuses. You feel me?
No.
I had to set
I'm
up my
just like,
Wi-Fi over again. I had to
yeah.
rearrange my room because I got a new bed.
Listen, it's tough times. People can come, they can't come. I'm trying to be very, grace, compassion, right? That's the main thing. So your laptop died, your room is in a shambles, no problem. I appreciate that you still joined even last minute, because it sounded like there was still something that you